Hi, and welcome to this month's market update. I'm joined by Philip Naylor, member of our capital markets and asset allocation team. Welcome, Phil.
G'day, how you going?
Good, thank you. Can you give us an update on how markets have been?
Yeah, sure. So markets have been a little bit more cautious this year, and that's come off a very strong 2019, as we've seen that equity markets rose by about 15 to 20% last year, so a very strong year for equities. This year things have been a little bit more flat broadly, and of course coronavirus has been one of the main topics people have been looking at.
Yeah, so how have you been thinking about the coronavirus?
Yeah, sure. So it's obviously having a very big impact on a lot of people around the world. In terms of the economic impact, it's a very difficult topic to try and think about, both the economic consequences and also for markets. Our team has really tried to focus in on the investment implications, and when they've looked at it, so use the example of potentially the SARS outbreak in 2003, what we found was that had a really meaningful negative impact on Chinese GDP when it occurred, but that it was temporary, growth did recover, and markets also rebounded fairly strongly afterwards. So there is some hope in terms of investments that could be temporary, but obviously China's much more important now than it was in 2003 in terms of the global economy. So we have to be a little bit cautious about drawing too many conclusions there.
Yeah. So how about things domestically then?
Yeah, sure. So coronavirus obviously going to have a big impact on Australia given our trade links. The other big thing is the bushfires, which again has obviously impacted a lot of people around the country. In terms of its impact on GDP, the RBA has come out and said that they expect that should reduce domestic growth here by around 0.2% in the first half of this year, and then we should see that when the rebuild comes online, that should help to provide an offset towards the latter half of the year. So there are some headwinds there to domestic growth. On the flip side is that we've seen a continued recovery in house prices in Sydney and Melbourne, so it is expected that as those house prices increase, that will help consumers be a bit more confident and go out and spend, so that should provide some offset in terms of our GDP figures.
Thank you very much for the update, Phil, and thank you for joining us.